This is a video about how to set up Iron Condor using Thinkorswim. I'm going to be using a paper money account, so it's all for educational purposes. I'm going to use Apple just because I've been using it for a lecture. I'm going to tap on Apple and I'm going to look at the options. Notice the menu at top, it says chart, news, options, portfolio, and profile. I'm just going with options. Now, notice there are different maturity dates. I'm just going to go with something nearby just for so that we could actually experience the maturity date for this specific option strategy. So I choose May 1st, and with respect to the example that we've gone through in online recorded class for this, I'll go with something cheap on the downside. So since this is an Iron Condor, I need a credit put spread and a credit call spread. So let's go with 260 on the downside. So I'm going to go with 260, the bid price of 97 cents. I'm going to tap on that one. Now notice I have an order editor now, and there are 10 contracts chosen. I'm going to change that to one contract, and I'm going to tap on add option leg. Now I can add up to 4 legs with the order editor, and that's all I need for an Iron Condor anyway, so that's actually quite nicely set up. So our current one is already chosen to be 260 at 97 cents. This is the one that we are writing on the downside. So I need an insurance, and just to follow the class example, I'm going to buy a protection and insurance at 250, $10 lower, $1,000 risk, and the price for that 250 is 36 cents on the ask price, so I tap on that one. So notice how there are now 2 legs of the Iron Condor. These are the bottom side. 260 put, I'm writing one contract at 97 cents, and a 250 put option, I'm buying at 36 cents. The 260 is the one that I'm making the money, 250 is the insurance, and the difference of the strikes, 260 minus 250, the $10 per share, is my risk. So since this is one contract, there's $1,000 risk. Now let's do the top side. I'm gonna look for something that I actually see close to our class example. So I'll go with 305. This is the one that I'm gonna be writing. So I'm gonna tap on the bid price of 75 cents. And now I need an insurance just to keep it balanced, which doesn't have to be balanced, but just to make it similar to our lecture discussion, I'll make it balanced, and I'll go with a $10 higher, so $1,000 risk at 315, and this is the one that I'm going to be buying. So notice I have 4 legs now already set up. Tap on done. Okay, so let's review. From the top side, I have a 305 call. That is the one that I'm writing, and I'm going to be making 75 cents with it. And then with the 315, that's my insurance, and I'm going to be paying 30 cents to buy that insurance. That's my top side. Now on the bottom side, 260 put is 97 cents, and that's the one that I am making money with, and that's the one that I'm writing. And at 250, that's my insurance on the put, and I'm going to be paying 36 cents. Now notice the quantity is 1, and if I were to say change it to 2, all 4 of the legs of this option spread option strategy will change to 2. So I'll go with 1. And also the price that you see, 106, 116, is the one that I'm charging for the whole 4 of these legs. So one single strategy, 4 legs. So since I'm selling this, If I were to make this a little cheaper, my likelihood of selling this will probably improve, so I'll just go with 106. And because of this Iron Condor strategy, I'll be collecting $103.40, and I have a risk of $1,000 if Apple were to breach above 305 and then continue all the way to 315, or I have the same risk of $1,000 if Apple were to go below 260 and continue all the way down to 250. So tap on paper trade and then confirm, and then the trade will go through. Well, since this is Sunday, I can't do that, but this is how you set up an Iron Condor. Thank you.